All right. So, good morning, everyone. It's 7:58 your mind starting this particular video, and in this video, I just want to discuss about the last trade that I mentioned, the last trade opportunity that I mentioned, how I entered it, and how I exited it without waiting for it to hit maximum tip, the actual TP I was targeting, and the reason I did that, and actually saying that I might not do that again in the future, right? So that's one thing, right? That's by the way. So majorly in today's video, so I'll go over some trader thought process, or now I took another trade, and basically other trades that I'm looking to take again, just is we recollecting on the thought process that I've been um discussing with every one of us, right? So in my last two videos, I've mentioned the fact that the market comprises of two sets of people. We have the buyers and the sellers. No one is neutral. No one is not doing anything. It's that you are buying, or either you are what, either you are selling. And the formation of imbalance and balance conditions is what leads to what, a trending or a non-trending what market. So in a trending market, we have an imbalance condition, meaning that what, one side or one participant of the market outweighs what the another, hereby leading to what, formation of what, candle bodies in that direction of what, of the market. Good. Now over time, the opposite side will come to balance out the participation of the winning of the most volume volumetric side, right? So in doing that, you always have what, the point of what, balance, which is always like the midpoint of a week, the midpoint of an FVG, or the midpoint of a full body candle, or something like that, depending on how you are able to think through the market. That's what I would call price action in my own analogy. Right here we have candlestick patterns that are wonderful, but beyond candlestick patterns are baited because of what, the volume of buyers and sellers that are participating in what market per time per candle. So your ability to interpret this and say that, oh, these people are in control, that person is in control, this is in control, or that one is in control, will determine how well you will do in what, in the forex market. Good. So on that note, I will go straight to the AUDCHF trade that I discussed with us. The chart is still as it were in time here. So the AUDCHF trade from the 4 hours perspective, which I discussed with us, right? So if you check the last trade on AUDCHF, that so basically the target was this high. That was this target. Target was this high, and nothing like, there's no need to sugarcoat anything, right? So the target was this high, and that was just about it. So like I was saying, we had the trade opportunity to take the trade right from somewhere around here now, but I didn't execute the trade. One, because we went below this, went below the 0.71, and then two, we oscillated around here, and we have what, this FVG right here. So my perspective of entering the trade is based on the confirmation that we're able to take out the sell side of this market and come into what, the buy side, right? Meaning that the buyers are now, they've been able to what, they've been able to balance out the sellers at this particular zone, which is like more or less the strongest zone of the most protected zone by the sellers, which is half of this, right? So as soon as you're able to close into it, now like I mentioned in the last video, I was not awake when this particular candle was forming. This formed from 6, this formed from 6 o'clock, and no, yeah, this one, I was awake when this one was forming, but when this one formed, I was not awake actually. So when this one formed, this one from 6 o'clock to 10 o'clock, and then I just basically executed the trade right here and set my stop loss. I covered this point, the high of this previous candle to the close of this previous candle. Then the midpoint was like more or less like my balance point, whereby I expect that if sellers were able to take down price, we shouldn't have a body close below this 0.5, whereby which my lead was coming back down or even going out of this. So I placed the trade here, and then my profit target, like I was mentioned, was this high, this particular high right here, which was like a 1 to 4 1 to 4 trade, right? So that's just the idea, 1 to 4 trade. Now upon taking the trade, the trade went in my direction almost immediately, and then we had these averages whereby we oscillated, and we had the market close on Friday. So upon market close on Friday, the market opened. Let me drag this a bit. All right. So upon market close on Friday, the market opened, and what we saw was that the market gapped down while opening, right? The market gapped down. So this was the previous week close. Market closed at this point, and then the market opened right here. Let me take this off. So the market closed right here, and the market opened right here. So I captured this new week opening gap, and then I was looking at the midpoint basically. So upon seeing this, we came down, we started up, and then we even went higher to overtake this AVG again. I was confident, and then suddenly I saw this full market body right, this full sell body right here, this one right here. So when I saw this, I was like, oh. So what I did was, okay, I waited while my stop loss was still right where it was. I waited and look at what market was going to do. We came back, the sellers came in. We had this particular weak balance point, helping us. The upper side is protected by the seller buyers obviously, and the other half by the sellers, right? So, and we're still holding it strongly. So we came back here, we went above this. As soon as we came above this, my expectancy of the market was, okay, nothing should actually bring us back here. So what I did was I moved a bit. So if I had kept the stop loss here, which I didn't, so I moved a bit. I moved my stop loss right here because I was on drawdown. So I was trying to just cover a bit amongst my drawdown. This was about $11 profit already, moving it right here. And then what we saw was what the market came week down again to this midpoint, took me out on my break even, or more or less not break even per se, on my small profit. And then what we saw afterwards was the offshoot of the market to the upside, right? To the upside, basically the offshoot of the market towards the upside, giving us like a new balance point, And what I'm just looking out for this market now is the expectancy of the market to form a high and a possible retracement for a continuation upward. So basically, how I wish I could have played this trade was to just hold on till it reaches my max TP, but that's just by the way. If it had gone against me, I would have said that, oh, I'm happy I broke even and I didn't hit any SL, right? But it's still what it is. I think once I said I've accepted the risks from the earlier on, I shouldn't like have tried to, at least the best I could have done was to just be risk free and not try to just be in the middle of some oscillating price like this, right? Not try to be in the middle of some oscillating price as this one. So that's it. So right here, I was facing the thought of, oh, I haven't waited over the weekend and all of those things, and this Monday, there's Tuesday, and all of those things. So that was what I was just thinking about and brooding upon, and so it happened and took me out. Then we went ahead. This would have been 60 something dollar profit, by the way, but yeah, but that's actually by the way, right? So from here, what am I looking at? What am I looking for from here? Basically nothing much, just looking at this new FVG that the market has given us here. This is a point of imbalance, right? This is a point of imbalance. The buyers are protecting this top half, and then the sellers are hoping to come and imbalance it and come into this bottom half. So that's just it. As per AUDCHF. So yeah, broken this high and we are here now. So moving forward, let me just go on to see what I can do here. Okay, so you've seen how the trade played out, you've seen how I played it, right? I was faced with streams of emotion on that Monday, Tuesday trading day. You see how it worked, you see how things went, right? So yeah, we'll see how things went. But that's by the way, right? So one thing I could have done better, which moving forward I hope to do better and even improvise upon, is actually holding the trade very much well than I did. Right? It's better to just break even and put it at your entry than trying to go into the point of corrections and just take yourself out. You understand? So if I had gone into the point of my entry, I still know that there was that point of imbalance that is still protecting me. That was that midpoint, the point 5 that we had at that particular bottom level, right? So the reason I'm here is I want you to focus on what I'm saying. That's how I come to this um empty part of the chart with no candles, right? Now, um, so that's how AUDCHF played out. I left it with a very small trade, more or less like a 1 to 0.8 something, which is not good enough because I was waiting, I think, about $15 or so on that trade. So imagine then living with a $11, not up to 1 safe. So it was not a well managed trade, in my opinion, right? So your ability to manage trade also matters. It also matters. There are times that you need to hold the trade through to the you need to hold the trade through to the end, right? You need to leave your stop loss where it is till you at least reach your take profit, because that's my take profit one. There's nothing like take profit two or whatsoever, right? And then one other thing I'm wanting to do but I can't do for now is the not setting profit approach, whereby you continue to follow the trade until the market reverses and take you out. So basically, when it got to that my point of TP, I will just break even at that particular point, then look at the formation of FVGs and reversals back and continuation upward, because sometimes the market can just normally market can't keep going high forever, but there are sometimes that it goes high long enough to give you some level of profits that you yourself wouldn't have thought of or imagined if you are, so there's a trader that does that approach, not a Nigerian trader per se. It's I think an American trader here. So he does that approach. I've been watching him since I started trading forex, and I love that approach. There were times that I adopted that approach, but for now, the Nigeria idea of just coming to the market, take what you want to take, and just leave our home. So that's what it costs me to be setting TP right now. Right, that's what costs me to be setting TP right now. So maybe when I have more, when I start having more, I can start following that approach, right? That approach is an approach that ensures compounding. I just following the market till it says otherwise, not calling the top, not calling the bottom whatsoever in a trade, just following the market till it says otherwise. Yeah. So moving to, I think there are some background noise right now. Let me see how it's affecting the audio. Okay, so it's not getting in until maybe I'm talking. So that's by the way. Now, the other trade that I'm in on right now is the USOIL, right? This trade is one that I'm happy to be in on it actually. Yeah, I got in yesterday. I got in on the USOIL yesterday from a daily perspective. I got in yesterday, although I didn't get in like I got in using the daily candle as my approach of getting in, right? So you all could recall I was saying some things about the USOIL. I said, oh, it's not a time when we are around here, right? It's not a time. I was expecting to short the market basically. I was saying, oh, it's not a time. I was going to wait and see what the market was going to do, right? So what the market did was this. When we got this was like a opening gap that happened last month that's coming to the last week of last month. This was the opening gap that happened, and when this opening gap happened, what we saw was that we didn't come into this midpoint at all. We went last week, we had another opening gap the following week, and that was just that. So I was expecting that, okay, from here, from this particular point, when we came down here, market used this not new week opening gap per se, but this particular how I put it, it's an FVG, but this time around, this FVG, I captured this gap. I captured this particular gap in this FVG to have the FVG. So I captured the gap, although I might not have captured this one because it's meant to be at the closing price right here. Yes, right there. So capture this gap, and then this was our midpoint. Market came down, we found our support right here, and we basically went higher from here. Now upon going higher from here, the question is, would I have bought from here? Obviously no, I wouldn't have bought from God. I think I need to reduce the opacity of this thing so that we can see it better. I'm sorry. Okay, so I need to do it for everything, because yeah, I could understand them very well, but I'm not sure if it's going to be the same thing for every one of us. So okay, and let me drag this one just this way. All right, so like I was saying, so this was what I was thinking of right here. Position capturing. Okay, so the question is, from here would I have bought? No, because from here again I have like this point of imbalance that the market had created. Before this one formed at all, I had this point, right? So upon having this point before this one formed at all, I captured the low of this particular candle, this one right here, so the closing price of this one, and then I have the midpoint as my point of what decision. So my expectancy is, if you are going to start buying from here basically, or if the market was going to start moving upward from here, like was going to start moving upward from here, we have to take this one out, at least for the meantime. You have to take this particular midpoint, you have to take the midpoint out for the meantime, right? Now the following day we were unable to take the midpoint out, right? We were unable to take the midpoint out, meaning the um the volume of traders protected by this low is still very much imbalancing these ones, right? They're still below the midpoint basically. So the following day we came, the market came, we opened right here, and then we came back to test this midpoint again, and then we went up to close above this, meaning we were able to take out the balance point of this particular candle, right? So we have this midpoint, we balance them out, and that was just about that. That was just about that. So my expectancy is, from here now, market obviously shouldn't come back down to this point at all. Market obviously shouldn't come back down and have a body close within this point. So placing a buy from here would have been ideal, or expecting a reversal back to this midpoint to have a better risk reward ratio trade would have been very much ideal, right? But that's how the trade idea was. Okay, we were able to close here, so we could have placed our trade here and set our stop loss below here, targeting this previous midpoint. You understand? So that's how you targeted previous midpoint right here, and then maybe back to this midpoint right here, and you'd have still captured everything. You'd have still got it right above. In all buyers, you'd have gotten it right always. But I hope this candle, I know, is not affecting us. I hope the rectangles and everything, I'm going to try and just reduce the opacity. Hopefully we are able to see what I'm saying, right? So what I'm not just doing is just capturing market point of balance and imbalance, and using averages, also interpreting averages as point of balance and imbalance. That's just basically it. That's just it. So when we came into this particular, when we got this confirmation here and we continued upward, now from the daily perspective, we had this full body strength, this full buyer strength, right? Meaning we had like a full buy participation from here, a full buy participation from here, right? So at this point, this is our next point of challenge, this particular big boy here. You could see when we gap down, when we try to come up, this midpoint from here was where we dumped from back to this point, right? But now is our point of challenge. So initially, let me take that out first. Initially, before any other previous day was formed, this was actually our point, the point we are looking at. So the point we are looking at before any other day was formed, this was actually the point we are looking at, this point right here, right? Now the expectancy is, I want to see that market does not come below this midpoint and close the body below it, right? But we didn't do that at all. We went on and we broke this side. But before we broke this side, we printed an average right here, right? So the average is now what my point of what consideration right now. So for a buy continuation, I don't want to see that we come back and imbalance this FVG right here, because if we take this and close the body into this, it means that we can come back down to here or go back down into this point, as the case may be. Don't forget, we are coming and we are covering, we are closing this average, but this we are like, if we are continuing upward, we are looking at what market is doing right around these averages and all. You understand? So that's just the point. That's just the point. Now, continuing upward, now, what we saw was we came back down here and we tested the midpoint of this FVG, like very snappy. As we just tested it, we gave us a balance low. We gave us this balance low. As soon as we gave us this balance low, market continued upward. First one, that's the first thing. Market continued upward. That's the first thing. And then the second thing is we gave us like a full body participation again, like taking us out of this particular point again, we got this, right? So that was a fantastic push up. And once we had this push up, initially our point of imbalance would have been captured by this, right? Like I was saying, it has been captured by this, and then we were unable to come back down to the midpoint at all. Rather, we formed an FVG instead. So we formed this FVG here, and then we found ourselves in the bottom half of this previous FVG. That was the reference FVG that I was making mention of. So when we got here, this was where we expect that, okay, we've been seeing this market come down in the round now. Came back down to this point before we started going on, obviously. But now, this point market for me is like a closing wedge. You understand? Like, it's a closing wedge. So it's like, okay, we are getting smaller and smaller for the sellers or the buyers to decide on who will take the side of the market. And this is US oil, right? So there are a lot of things in play here. Inflation in the US, global balance or imbalance, like as in the case of war or whatnot, right? But the technicals are still in play also. The technicals are still in place. The volumes as per technical participations are still in play. Trust me, if there was war and no one is trading, there will be no price spike. Trust me. Like, there was war, but nobody trades, then there's no reason for price to spike. That's why you see the importance of technicals also, right? Because technicals will show you how markets behave when event occurs. Do you understand? The behavior of market participants is what prints price. Events happens, but events don't print price. But the reaction of people when event occurs is what prints price. So it's still showing you the relativity of what buyers and sellers in the market per time per candle. Do you understand that? So yeah. So moving forward, we got ourselves here, and upon getting here, this is where I'm looking to start selling from. Basically, I was looking to start selling from here. When we came into this point, I couldn't sell from here because I was like, nah, the risk reward would have been crazy. Because if I was selling from here, ideally, my stop loss is meant to come and be above here, which I cannot even condo it at all. So we were unable to close above this, and then the next candle we had this one, right? Now upon having this one, let me take this out. This is not valid. Upon having this one, we were like, okay, from here I was like, I have this market top here. This was like a point of imbalance, whereby the first half is where the buyers have it, and then the other half the sellers have it. Then we came here. So basically, I want to see a shift in market participation. So a shift in market participation is that we came and we take out this half that market is protected by the buyers, right? And from here, I could have shorted from here. Stop loss right about here, and still being in a profitable trade. But I didn't play it like that. I'll see actually right here. From here, I could have shorted already from here. You understand? I could have shorted already from here, but I didn't, right? I was looking at this FVG right here. I'm just expecting market to take it out, right? So when we came here on Tuesday, that was the first day, we saw like a full seller strength, and then we took this particular point out. When we took this point out, like I was saying, from this close to this point is my new FVG, is my point of consideration. From this, the low of this previous candle to the close of this full sell volume candle is my point of consideration. And then I still have this FVG in play, right, with its own midpoint also. Let me capture it together. Okay, sorry. Can't I capture it together? Why? Let me try this first. Okay, that's okay, that's okay, that's okay. So I had this here, and then I have this FVG right here also. That so I'm expecting market to sell, right? I'm expecting market to sell. Does not mean I'm going to just sell. So basically what I did was I have this big boy right here, and I have the midpoint of the FVG right here, and then the midpoint of this sell imbalance point right here, right? So what I was looking at is, okay, if we're able to come back here to give me a better RR, is I'm going to use this midpoint of this FVG and this midpoint of this point to be able to set a better risk reward trade, in my own opinion. So what we did is, as soon as we wick above this first midpoint and then we came to this second midpoint, I set a sell stop order right here, and I set my stop loss to the just to the top of this let me see how I can explain that. Okay, to the top of this candle, just a bit above to the top of this candle. That was around yesterday, getting close to the evening. And then what you saw was we took the trade activated and we were able to come lower into the trade. And then the following day we opened higher, but now we are coming back down, right? We are coming back down into this FVG, and then we have this balance points right here also. So I'm going to be very, very confident. Right now, I've broken the trade even. I'm on break even on this trade already right now. I'm on break even on this trade already right now. I'm going to be very confident. Firstly, if we're able to take out this balance point that's relative to this candle, that's the wick printed by this candle, the wick printed by this candle. The upper part is defended by the buyers, while this lower side is where the sellers expect the market to come into. They are going to have full strength. So if you're able to have a body close into this candle, into this lower half, I'm very okay with that, and I'm very happy with that. And then I'm going to go on to adjust my stop loss to this point, and basically that's just like a continuation idea of the trade. And then I'm hoping to like break this particular point if the market is going to continue lower, and then from there we drag it down, come to this point hopefully, and we're able to come to this low hopefully. So that's what US oil is all about. So that's what I was able to execute the trade, and I've gotten a better execution here. Maybe I might not be looking at a possible re-entry right here, but it's still very much okay. It's still very, very much okay. So right now what I'm just doing is I'm just looking at the market, and I'm looking at the sell side, looking at how balance and imbalances are formed within what this particular price ranges and all. So that's it. That's that. Now the next thing is GBPJPY. How are buyers and sellers participating? So please, one thing I want to say is these are not to give you any trade idea of any sort, right? I don't. Yeah, this is not to give you any trade idea of any sort, right? So it's just to show you that, okay, if you are saying that, like, if it's not by saying, oh, this strategy or that strategy is the best of any sort, right? What I'm trying to tell you is try to think of markets in terms of what market is all about. That's just buying and sellers participation. You understand? Yeah, we have the break of structure. You should be able to look at structure also. You'll be able to look at structures. You'll be able to know when one trend is in one direction. We should be able to identify trends. Very, very important, right? Very, very important. Very, very important. But more important is your ability to be able to know when to execute a trade. Let me be honest. So when to execute a trade is very, very important. You know, this ideology of like, yeah, there's nothing like you can get in at any point. when is very, very important. If you want to like be actually profitable, the when you execute is very, very important. The whole idea of the sniper entry model that you see people discussing is a sniper entry because of when, and where. When, where, they are both relative to each other. The time and the point of market is a relative condition. It's a relative condition. You understand? So that's it. So if you are able to know when, where, it means you understand who is in control. If you can know the when, the where, then you understand who is in control. That means what? You understand the most advantage positions, the most advantage trader per point or per time. You understand? So the same thing applies for JPY. So this one is on 4 hours, right? This one is on 4 hours. If I'm doing my structure on one particular time frame, I mentioned that I'm executing all my trades on that particular time frame. That's it. My confirmation on that time frame, my execution on that time frame. So for this one, I don't yet have a trade. Basically. Yeah. I don't yet have a trade, but I have the buyers already in play. It's a big one. This one is like me. I'm not too. I'm skeptical about this one. I'm skeptical about this particular one. I'm very skeptical, but my skepticism is not based on my technicals, rather based on the market condition right now, right? Based on events happening, based on inflation, based on economy news and all. That's what my skepticism is about. Meaning that there might be point of spikes or whatnot, which is just an interpretation of what traders feeling when events occurs. Right? That's one thing I want you to put in mind. Your technicals don't fail because of events. Do you get me? Your technicals don't fail because of events. Your technicals fail because you fail to let event point price, and then you come in and you act. Right? You don't expect your technicals to be followed when market is taking action not based on past data, rather based on immediate data. But your technicals is based on past data. Do you get me? Your technicals is based on past data, and then there was an immediate data, and you expect your technicals to go in the direction of that immediate data. It might go in the direction of that immediate data if only your technicals aligns. The past data you use in executing your analysis, your technicals aligns with the present data that is being released. You understand? So your technicals failing because of events or news event is it's close to 90% possible. It's close to 90% possible, or even 99%. 1% of the time it might align with you, right? So that's just it. So when there are events like that, you should expect that your technicals might fail. And it failing does not mean it's not trade worthy or it's not market worthy. All strategies, depending on how you think about it, I don't know, should be market worthy. If you know what it is, if it's telling you this is what to do, this is when to do, this is how to do, if it's giving you confirmation of full market participation, full point of imbalances, full point of trends, then you are good to go. In my personal opinion, you are very good to go. So let me see. So what am I saying in this particular market? We had this crazy point right there. We had this market high. For me, we had this previous high. We had a low right about here. Body closes my low. Body closes my low. Formed this new high, and then we came back down and we broke this low right here to give us a new low. So for a sell continuation was, firstly for a buy continuation was, we should come back to the 0.71 and continue upward. Come back to the 0.71 and continue upward. We tried to continue upward, but then we already have a sell FVG right here. And when we had the sell FVG, we came to the 0.5. We were able to balance out the seller side, and then we continued lower, basically come back to this balance point, the midpoint OLD again, until we were able to crack it, and then we came back down here. So forming a new low, I expected that okay, let's come to this 0.71 and possibly reverse from here. When we came to this 0.71, first of all, when we came to the midpoint of this week, we've seen an FVG, then we came to this 0.71 and we broke it. Upon breaking this 0.71, I placed a trade actually, just in the same manner of that previous trade. You can see this, place a buy here, place a stop loss right below here, expecting that the midpoint of this candle should be able to take us high. And what we see here is what you can see how it plays. It's just the midpoint of this candle is not like the midpoint of this candle. The midpoint of this candle simply says that, oh, market and sellers are in participation, right? So if the sellers try to take us back down and like take out, I would not want to say order, but take out the volume of trade that the buyers are in control of. From this point, the buyers are in full control, but if the sellers are able to neutralize them by half, then they can be able to neutralize them by the other half, basically. But then we were unable to get that, and basically the trade went, and then we oscillated for some days. Upon this oscillation, I was already tired. In all honesty, I was already tired. My target for this trade was this 0.71 right here, which later played out, but I didn't hold the trade to this 0.71 right here. When we started oscillating here, I was frustrated, like I was with AUDCHF. So I think this point of frustration, I'll start looking at it and possibly that's why I'm trading on higher time frame. I don't want to come to the market and having to check each time frame, having to come every 1 hour and then take actions drastically. You understand? So I could have gotten this full, not from this board, not from the low, no, but from this point of buyers that I had, and just from this point of buyers, I had a long trade upon the close of this candle right here, the stop loss right here, and then and then the target right here. So that's just like another 1 to 4, and that's just it. That's just it. So, but I didn't take the trade, obviously. I didn't like hold the trade through. You understand? I didn't hold the trade through. Okay, so that's what I'm meant to say. I didn't hold the trade through, and yeah, I didn't hold the trade through just because of the events. I was thinking if we come and see another news now and then, bam, it will be very, very drastic. But that's just it. That by the way. So now I'm seeing a cell structure here, like a cell, like a cell, a cell string here, relative to this, like from this point to this point. Then we came back down. You understand? So I'm taking my high here, my low here, and then I'm taking my fib. With my fib, capturing my 0.71 and 0.81, right? This point and this point, and then I'm looking at it. Okay, old market do. So immediately we came to my 0.71, then we started what weakening around it. So I didn't do anything here. I'm expecting market to come back, and this particular FVG, like this half is protected by buyers. I'm expecting to have like a close into this other half if I start participating in this particular market. But this 0.71, I was looking at what market was doing from here. So the first thing is we saw this weak. So I'm not doing it. Imagine if I had come and done something for me, I would have been taken out already, right? I would have been taken out already, obviously. So we went above it a bit. We're still within the range, and then we come back down here. So coming back down here, we have this FVG formed here, and then we're continuing lower. But my action point is not yet. It's not yet time. So I want to see markets come and take out this half completely. This half point of the market that was caused by people reacting to some, or by market participation or manipulation whatsoever. I don't care. So my point is just I'm seeing this and it's telling me point of decision. That's it. So I'm not selling until we're able to come to this other half and give me an FVG. If it gives me an FVG, that FVG is going to help me set my trade and my take profit as I would have set it. You understand? So that's just me playing by the trade, and yeah. So that's that on GBPJPY in my trader's thought process. That's in my trader's thought process, not your own thought process. My own personal thought process, please, not yours. Don't go and be trading this way and There's no market advice. I've spoken for a while now. I'm already getting tired already. Okay, so gold. I'm not saying anything good for now. Not saying anything good for now. Yeah, not saying anything good for now. Not saying anything for now. I'm expecting gold to reverse actually to the 0.71, but it's going to be a long wait. I don't know. It might be immediate, but I expect it to be a long wait. I expect it to be a long wait, basically. And then let's see, here's the card. Actually, okay, the USD card trade I was discussing with you. US dollar is now US dollar is like giving some strength and I was saying that I was expecting market to come back here, and then from here we start seeing what market will do. But we haven't come down here. I believe we might still possibly come down here. Yeah, we can still come down here. In my honest opinion, we can still come down here. Well, I'm not playing anything yet. So, yeah, GP225 from 4 hours. We are stuck in this range. Nothing is happening. Okay, so sorry. Okay, let me do something now. I'm done talking about like not trade idea. Please, they are not trade ideas. Take notes, they are not trade ideas. Just walking through my own thought process as a trader. Just thought process. Every trader should have their thought process, how you process the market information, right? How you process the market information. It's very, very important for every trader to have that. Every trader is very, very important that we have that. Very, very important that we have that. For every trader, it's very, very important that we have that. This GBPJPY trade is, yeah, this one. I sold, right? I sold. Okay, so this one is actually, I'm very skeptical about this trade. I sold from here, bought out here, very painful. It's oscillated, and now we are actually back to the point of TP. So we even pointing more cash. So that's just it. Okay, so I think I can end to this video here. Yeah, can end to this video here. That's been wonderful. Yeah, it has been wonderful. I hope you learned from it. Actually, I hope you learned from it. Hope you learn from it. Hope you learn from it. Hope you learn from it. That's one thing. I hope you're able to learn from it. I hope you're able to get I hope you're able to get any form of information, any form of knowledge that would help you do better when it comes to analyzing the forex market. Help you do better when it comes to analyzing the forex market. Before this year ends, I'm going to put a particular preparation in place. To like break down the trader thought process very, very, very well. Like compound examples and every other thing, so that I can make it much more presenting and much more information packed, rather than showing you in the now. I know showing you in the now is very, very fantastic. It's what I would have loved best, right? It's what I would have loved best. But there's a need for you to see it. But showing you in the now is like, it's going to be much of a slow process. But I think, yeah, you should love the slow process. You should come back and see what it's doing again and again and again. Not trying to do it immediately for yourself, right? You too can go to your demo, your paper trades, and your paper trade or your demo trade, and like think in that direction, think in that manner. You understand? So that's that about it. The trader's thought process is 8:42. I made the video for almost an hour, and yeah, thank you very much.